Could metal prices tell us anything about where the economy is headed? Joining me today is Ed Egilinsky. He's the Managing Director, Head of Alternative Investments at Direxion. Ed, nice to meet you. Welcome to the show.
Yeah, thanks for having me.
So it's been a tough summer for the metal complex. Investors want to know, could things be turning around? And what could the metal prices right now tell us about the state of the economy?
Well, right now, with most metals at least yearly lows or multi-year lows, it does say that maybe the economy is slowing down a little bit from a global perspective, although you don't see those numbers as much here in the U.S. I think the biggest reason why the metals, whether it's precious or industrial metals, are one of the worst performers this year is because of the strengthening dollar. And the metals are probably the most sensitive to a strengthening dollar of all the commodity sectors.
So do you think gold and silver could turn it around here before year end?
Well, from a contrarian standpoint, right now gold has almost historic short interest. In addition to that, you have pretty much record low vol. So from a contrarian standpoint, you'd have to believe maybe gold now could rebound. When you look at the gold-silver ratio, a lot of people look at that ratio right now. It's at a couple-of-year high in terms of that ratio, meaning that silver represents more of a value than gold at this moment.
And people had spoken to at the start of the year really thought that this was going to be silver's breakout year. Obviously large disappointment now. Why do you think it just hasn't been able to break out here?
I think, again, it's a strengthening dollar story. Also the trade wars as well, I think has had a major impact, in particular, as I said, sensitive to the metals mostly when it comes to a strengthening dollar. But a lot of commodities this year are down, excluding wheat and oil, which is more an OPEC story than anything else.
So is it a buying opportunity? Would you be buying the metals here or the miners? Let's talk to miners.
Well, the miners actually are performing worse this year than the physical gold itself. We have triple leverage gold miners and junior gold miners, some of our more popular products, which is Nugget and Dust and JNUG and J-Dust, but those are very short-term vehicles. For somebody that wants to allocate to commodities, I recommend a broad basket of commodities because individual commodities can behave differently at times, and you want something that's tactical in nature. So we have a broad basket of commodities. It's an ETF, COM is the symbol. And it basically looks at price trends of each of the individual commodities and goes long those commodities that are showing a favorable price trend and be in cash in those commodities showing a downward price trend. So right now, based on price trends, our strategy is in cash with gold, silver, and copper.
And most upside potential, if I had to ask you to identify?
A lot of the commodities right now are at low points. In fact, the broader commodity basket is probably at a 50-year low right now relative to the S&P 500. So certainly if you believe in a reversion to the mean, commodities in general are probably a place to consider an allocation. But specifically, I would say the grains. Wheat has been immune to the trade wars for the most part because of some of the weather in Europe and the Ukraine. But I think if the trade wars straighten out, soybeans could really be a big benefactor to that because the U.S. exports about half of their soybeans to China. So if that resolves itself, I think the grains could really take off.
Right, good thoughts from you today. Ed Egilinsky, thank you so much for stopping by.
Thanks for having me.
And thank you for watching. We'll be back tomorrow.